CTM, what is going on, everyone? I hope you're well and doing great. We got a little bit of a roaring in the bliss playing this morning here. Now, Bitcoin, it's showing some attributes of price discovery behavior. Not yet in price discovery. It is when it's making new all-time highs. But as you can see from this type of price action that we're seeing, we saw it after the ETF intern leak and at other points in time. Here he goes, the ETF intern leak. And at other times, sorry, it's over there. What's going on, everyone? What a beautiful day here watching Bitcoin do Bitcoin things. We had to play roaring in the bliss because we are absolutely roaring in the bliss across the board, right? We took that Bitcoin position just the night before yesterday, already here back into double digits in profit. Ethereum here holding a nice trade, 40% into profit. We're seeing, you see all that spiking liquidations taking place. I suppose we have lots of shorts, and then we also have a lot of longs, people FOMOing in right now at the wrong place. If you look at what's going on over here, you can see the green line is account balances, Bitcoin roaring in the bliss. Now, we're almost back to 2022, where Bitcoin made that new all-time highs, right? November 2021. And you could see some people are like, well, you know what? I just like to hodl. I like to dollar cost average. That's what we're going to talk about today. We're going to talk about having a bit of a better plan. Not this. This is like for those who are really committed. What you're looking at here takes place on the 8-hour time frame. It's for those who are serious, not that people trying to change their family's position in life by saving in Bitcoin, by having a long-term perspective, and is not absolutely committed and doing legendary things. It is, if everything works out, right? If Bitcoin continues up and to the right, there's better ways to protect yourself. Very simple ways to protect yourself. We will talk about that. I think it's important to talk about. Dollar cost averaging is right. Is it? I consider dollar cost averaging like it's a good strategy, but with just a little bit of thought and effort, you could do a lot better. Now, friends who are like follow from afar, who are not really involved in the space, like each and every one of you is an early adopter. You really have a tremendous head start on your education on regarding money, regarding how money works, regarding the future debasement of the currency, regarding the hedge against that, Bitcoin. Now, if Bitcoin at any point in time threatens the status quo, there will be attacks, right? There will be attacks. Bitcoin is the honey badger, and likely Bitcoin is going to come on top. But that's not a given. We don't know where Bitcoin will be tomorrow. Nevertheless, 5 years from now, or even 10 years, there are better ways to protect yourself. I think it's important to talk about that. So we will talk about that. Dollar cost average plus is what we like to call it. But over here in CTM, right? This is CTM, CTM 2.x, and X is filters built on top of CTM 2.0. And you're looking at Ethereum roaring in the bliss. I mean, what a massive advantage. Instead of almost, if you bought the all-time high, if you dollar cost average on a weekly, monthly basis from the all-time high, you're into profit. If you bought the all-time high, you're almost break even. But if you've been growing your balance all of 2022 bear market, all of 2023 bull market, we called the bull market breakout in December of 2022, and now we're watching Bitcoin do Bitcoin things. It's a power position. There's no question about it. Cardano holding an open trade over here. This trade is currently, barely into profit, 5%. Right now, we are definitely seeing Bitcoin and Ethereum running the show. And you can see the bottom one, Solana, has just been out of the market. Now, Solana had the massive run up all of 2023. it carried everything. And now here it is on. This is the beautiful dance in action, and you can see Solana is just consolidating with an upward slope. Usually, those type of things are very bullish. Here's the last time it consolidated in an upward slope, and the time before that it was consolidating in an upward slope. They have led to big moves. I don't. Here's the thing: is I don't know what happens next, ever. And that is the position of power right there, is knowing when to be in the market, when out, and on what side. If you were watching yesterday's session over here, we gave a couple of different awareness points. If you didn't watch yesterday's session, I would go ahead and watch that. We covered things like, how would you identify this cycle breakdown? Will we see a drawdown 10-20% prior to the halving? Is the 4-year cycle fully broken? Has everything changed? Like, what happens next? We answered all of that in detail, and we began discussing the likelihood of a left-leaning cycle increasing, and we'll talk about more of that in episodes ahead. By the way, I love the energy of the public streams, and that's why we're here today. Bitcoin breaking out above 60K, showing characteristics of that price action. It does in discovery. We were tracking that ahead of time. What do I mean by that? I mean, once we broke out the yellow line is the last bit of resistance that comes off the all-time high in price, right? And once we broke above it, at that point we were watching what happens, because in the past, anytime that has happened in any point in time, you have seen all of a sudden this price action that we're experiencing right now. So regardless if it was before the halving, after the halving, we just wanted to be alert and watch what's happening. And since the breakout above the 0.786 retracement fib, we have seen some very favorable price action on the retest, resuming up now. And, we just want to be aware and mostly know where we need to go ahead and look for any point where something is not correct. And perhaps, for us, it would be more just mentally being prepared for what's to come. We obviously are executing off of a systematic plan that we have gone into great lengths into develop. I like to say that, like, the public live streams bring this fantastic energy, and I thrive off it, and I love it, and I want to share it with all of you. And it's in the private end that we're able to do all the work, and that's what's necessary to go ahead and develop these type of strategies in the market. Takes a tremendous effort. It's an effort that we call the collective, the hive mind. Tomorrow we have a summit team meeting. So Friday, I will get back to you and let you know everything that we discussed that we're working on. This will include the dev team. This will include the summit team. And there is, like, when I'm sitting in on these meetings, I am truly humbled by everyone working together here at CTM. I say to myself, well, maybe I should go ahead and take some courses here on whether it's like machine learning, AI, Python, and everything else, just to be able to continue to lead. But I think we've done a good job in putting together the team we have, and what is taking place here is absolutely beautiful. So I'm looking forward to that. So that will be Friday, will be a little bit more dense. And we got a curveball coming, something that's really new, something that's really exciting. Those that were here in 2022, you remember when, like, we didn't have that blow off top, and we talked about de-risking at 53,000. And then after that, I said, you know what? We're like 4-year cycle. We'll follow it from afar. We'll probably still be able to track it among the best of the best out there, but we're not going to rely on that whatsoever. We're going to go ahead and we wound up developing this mechanical edge, and then we're going to continue taking that further. Now, I like viewing, speaking of 4-year cycle, this is by block count. We're often viewing this lined up from the halving, from the all-time highs, from the lows, with days after. This is block count, and you could say this is very different. And the price action that we're seeing is very different. This is like lining them up from cycle peaks. Now, I don't think that's the way to go. If you're lining them up from cycle peaks, by the way, it looks like this. This is the November 2021 all-time high lined up with other previous highs. And well, Bitcoin's acting very different, and if those that are following Fourier cycle theory that basically were late to it, they started following it after 2021 peak, and they were like, I guess like, every other thing that I was looking at, I just got it wrong. I want to go ahead and follow Fourier cycle. Well, if you're following Fourier cycle, you likely have been looking for a pullback coming into the halving. It's not what's happening, obviously. That's not what's happening. But however, if you look at it a different way and you were to line it up from the April high, well, you have to say that structurally it is right on time. So you know what? To go ahead and navigate the markets, you need multiple vantage points. Whether that's something simple like looking at a chart on log and linear, whether that's viewing something from many different angles so you can have a more complete picture. It winds up being a true edge when you have the complete picture. Now, this is with today's price action included over here, and I mean, it's uncanny the similarities. I mean, I know that we had the all-time high here in Bitcoin in November 2021, but from the structural high, all three of those cycles at that point had an upward move over here, all bottoming right around the same time, right? This is a standout over here. This move from from December 2018 to June 2019. Now, I think that happened because that was the Fed's last rate hike, and that's where they pivoted and moved towards pausing of the rate hiking cycle. I think that all this is a lot more complicated than people let on. I think that we live in a world of a central banking system where the US dollar remains king and the Federal Reserve is the one who sets the policy for the US dollar. I think that the biggest role played in finance comes from the central bank liquidity cycle. And I think that is what Bitcoin tracks. But we're not getting into any of that today at all. We're just taking a look at what's going on. And in yesterday's session, one of the things that we talked about, and if you didn't watch that session, it's on the channel over there under live sessions. One of the things that we talked about, and I want to just go ahead and reset it with you today, is we have this line of resistance above us. Price has come into it this morning, and we added this line as well. We went off of that low right over there. And we said, if we are able to break above this line of resistance, that is what we'd be targeting next. I did not expect that within 24 hours we would have broken through and tagged it. But there we are. Here we are. And that's some keen awareness. Does anyone have any ideas or thoughts about why the miners have not been following here in this current move up on Bitcoin? Mara's in the green. Riot's getting wrecked. I'm not sure why they're not playing or if that's just an early sign. Tomorrow is a big deal as far as I'm concerned for markets. Tomorrow we have PCE, core PCE coming out, along with unemployment claims. That could be a wild card if that were to be a big miss, or but I don't think so. I think tomorrow markets are going to key off of core PCE, and we have a bunch of Fed speakers coming up as well as Thursday and Friday, tomorrow and the next 2 days. That has a chance to go ahead and push the current first expectation for a rate cut, which is right now in June, after Powell got on to national television 60 Minutes a couple of weeks ago and was said that the first cut is coming around the summer. It's not political, and it potentially could push that into July. So that's something that we are watching. It could also align rather with seasonals, which puts the end of February, right, and through March into what has been in an election year a bit of a, let's say, downward sloping correction. before by the end of March into April, finding a bottom and then moving up. So tomorrow, I believe, is a big deal. Oh, I want to just go over this with you before we move back into what's going on with the Bitcoin over here. By the way, if at any point in time people are wondering, like, well, when do you take profit? And again, we were buying at a place that, well, I saw people out there shorting, right? I saw Gareth adding to his short, and I'm like, yesterday, I'm like, listen, we do a lot of things that are counterintuitive to a lot of traders. Like one of those things is that we find ourselves often buying momentum into resistance and selling into support. It doesn't always work out. It doesn't always work out in our favor. For example, over 50% of the time, well, we expect that we're going to have a loss. It's just the way it is, right? So it doesn't always work out, but often the big ones do, and that's where we are right now. So we took that trade and we're holding that open position, and it's double digit into profit, which is, well, that's a beautiful thing. But here's the thing: if price were to retrace and begin pulling back, Bitcoin on the 8 hour takes profits very quickly. That's how it's designed. Feeling very comfortable about that. Now we also have over here. This is the two you're just looking at: CTM 2.0 and CTMX. We have BTC 108, which is an X version that is significantly more profitable than BTC 107, but I like the drawdown and consistent return of 107. We have some people who trade the buy side only on the 8 hour time frame, and currently doing its thing and doing its well. All of these are in the same entry. And then lastly, we have the daily time frame, buy side only. That's what I want to talk about with you right now. So let's move to that. And why I want to talk about it with you is because we were briefly discussing what a dollar cost average strategy looks like, right? And a lot of people feel very comfortable saying, I look, I'm in it for the long term. I understand the risk, and I'm hoping to basically participate in a couple of more cycles. Now, hopefully, if y'all invest in another, decade into the markets, hopefully that the Bitcoin you're able to acquire, well, hopefully you're able to pass that down to the next generation without ever having to even touching it. Hopefully you're able to go ahead and be able to conquer thyself, conquer thy markets, and be able to not just see the Bitcoin trade, but be able to understand how markets work and put yourself into a really good position. But here's the thing is, you know, there are some powerful actors out there. One of them is BlackRock, right? Was it recently that Larry Fink was proposing that as part of the Great Reset that they should confiscate property? There are some people who think that Bitcoin is property. Now, who's holding the keys to all that Bitcoin in that ETF? It's BlackRock. Do you think at any point in time there's a risk that that Bitcoin could be confiscated? You will own nothing and be happy. I think it's a risk. I think that they could try multiple different forms of attacks, including soft forks and hard forks and whatnot. And listen, people that are powerful in the eyes of the world, they tried to conspire together to consolidate more power. So I wouldn't put it past any type of future attack, whether it was coming from the government itself, whether it was coming from the governments, as far as G20, G10, G5. I wouldn't put it past it to come directly from the United States, and I wouldn't put it past it to come from those that run the financial system of the US at any point in time. It's all possible. It's not just a small risk, I don't think. Now, Bitcoin is known as the honey badger, and I believe that in the end, Bitcoin is going to win. But a lot of people that have maybe a 2 cycle plan, you might be taking a lot of risk in the meantime. By the way, what would happen if they were to, I don't know, pretend that like some people in the Middle East cut the underground cables because they cut it themselves. You remember what happened with the Nord Stream pipeline? Like someone blew it up, someone blamed someone else. What happens if the internet were to go off and it was to go off in order to go ahead when it's turned back on to have it more neutered so that you have to use your biometrics in order to be able to access it? Do you think that Bitcoin's initial price action would be favorable? There are a lot of things that could happen. The easy way is to say that, well, you know, Bitcoin 2 years from now is going to be X price. Maybe I hope so. I believe, but I don't know that that's the way to go about it. So here's a very easy way to go about it, right? If you're trading Bitcoin on the daily time frame, buy side only, and let's say that you were dollar cost averaging throughout the bear market and then continued. Does anyone have a roughly how much percent you would be in profit? Because now that Bitcoin is approaching all-time highs here, trading above 60,000, you're in a really good position. I think that you were around 24, 25,000. You were likely at break even if you had been dollar cost averaging from the top. That's a good place to be in. If you're dollar cost averaging from the top around 24, 25,000, you were break even. That's pretty good. But what happens if you dollar cost average like this? What happens if you dollar cost average when you had a buy signal, you're all in the market, and then when you have a sell signal, you're out of the market and you dollar cost average into your cash account, right? So buy 4% loss, dollar cost average into my account. Buy out of the market, dollar cost average into my account. This is a tough period to go through. You make it through, you dollar cost averaging. By the time you get to here, you are up on your account, preserving all of that purchasing power massively. Let's see what the buy side only returns are over here. This is coming from 2020, right? Can you imagine from 2020, the first bull market run up, preserving all of your purchasing power and doing it with only a 14% drawdown and paying taxes happily, right? People are afraid to pay taxes, but people wish they had money to pay taxes with. Now let's try off the top though. Let's go off of what that looked like since the top of the last bull market run. And you're talking about not only a 92% gain, 15% drawdown. You did that preserving all of your purchasing power from that bull market run. If you are looking to play the next two cycles, why not store your coin in a hardware wallet and go, there are different third parties that now offer trading outside of a hardware wallet where you keep that in cold storage. Unchained Capital is one. Now the fees are something to contend with. The fees when you do that are going to be much higher. Let's say that they were really high. Let's say that they're 1%, which likely there's something are on both the buy and sell side, right? Now that's a massive difference in both profitability and drawdown. And I just want to give you one more reference point of what that looked like from 2020, including both bull markets. But here's the thing: for security and for peace of mind, that's, most people gave back all their gains, held it through a 76% drawdown, and continued up. This is not including, by the way, this is not including what it would be like dollar cost averaging into that cash account during the down periods over here, so that when the next move started, actually, you don't even need to dollar cost average if you're doing this, in my opinion. If you want to move ahead, you surely can, but you could actually then diversify out, start dollar cost averaging into, I don't know, FNGU or something like that. By the way, if we move over and we look at what Nvidia is doing over here in the daily, holding a massive 49% position open into profit. I mean, it's not often price goes like that. And I mean, there have been other times, even this year, where it's done that. But that looks similar to the price action that ensued before we had a big correction. You'd be better off, in my opinion, having that Bitcoin play, cold storage, and then diversifying yourself into something like FNGU or Tesla, or Nvidia, somewhere, some tech or something like that. You don't need to dollar cost average if you are able to have a simple strategy, dollar cost average plus in effect. Anyway, what do you know the fees on that? I'd be very interested to know the fees. I mean, 1% is high. I think it depends on the amount you're trading as well. But I'm hoping, here we go, Ace, looking at the dollar cost average from 2000 and from October to present, $100 a week. You invested $12,200 for 120 weeks. You have gone ahead and bum 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 93% return. That's what we're looking at. Now, we don't have the ability to calculate it in the Modays. If you were dollar cost averaging $100 a week from October till present and deploying CTM on the daily, you would absolutely obliterate that return. All right, let's keep going and take a look at what is going on. That's something that I wanted to get to talk about yesterday and wasn't able, so wanted to get it out today. I want to take a bigger and better look at what's going on here with Bitcoin now that we have abruptly hit our next target area. So when I say target area, what I mean is in yesterday's live stream, we were looking at, again, if we broke above that last particular this last particular resistance, what we would be targeting next. Again, I had no expectations that we would be targeting it so quickly or reaching it so quickly, but here we are. What's next? Has anything changed? Well, we were looking at like the first idea, the first moment that potentially we were looking at any type of sell impulse entering the market. That has not yet occurred, right? We're not even close to that. Here's that reference point. We're well above it. I mean, there's nothing to do today except sit back, enjoy the moment, and continue to trade your plan and manage your plan. I think that there are many people out there who have shown you that trading against the trend is just absolutely silly. There has been, I mean, from the bear market low to where we are right now, I have seen the same people continually calling the top and shorting it. If you've been one of those people or you are like, forget FOMO, I think that everyone here watching has enough experience to know that, you know what, like, I wish I probably was, if I'm trading, had a mechanical edge that could keep me on the right side and I could just like execute off it. And if I didn't and don't, I know not to chase a 12% move that has occurred in about 24 hours. Like, even if I have FOMO, I'm going to stand aside. I think everyone is there, but I hope that people aren't like looking to short these type of behavior. Because yeah, you could easily throw on a short at 63,000 into resistance and then very quickly it could drop 2,000 or drop $3,000 in very quickly this morning as we were getting ready to go live over here. And let's take a look at it on a 7-minute chart. I mean, look at that. That's 64,000. I didn't even know we tagged 64,000. Oh my gosh, what happened here? This is the all-time index. Did this happen like on Coinbase? Y'all didn't even a 9% move. I hope if you did that, you were quick enough to take profits. That's the only one that I remember happening since the last. That's the first one I remember happening since May. That was that quick. May 2021. And again, we were just talking about we're seeing lots of characteristics of price discovery, even though Bitcoin's not trading at a new all-time highs. And there are very few out there that I think that would have had the same awareness to know that, well, Bitcoin doesn't need to be trading at all-time high for those type of behaviors. What Bitcoin needs to be doing is trading above the last trend line resistance and above the 0.786 retracement fib. And that's why we have these areas circled, because in the past, when that's occurred, we have seen this type of price behavior. So, there's, in my view, every reason for it. In all of your views, every reason for it, in so much as that we're seeing the massive inflows. Coinbase is down. Let me check a Coinbase chart to see that move. I just want to see if that's what also occurred here on Coinbase. It's Bitstamp, so it occurred everywhere. Point being is that it is absolutely silly to be trading against the trend, to be with such momentum, be trying to fade it. Even if you get the top and you get a nice position on and are able to capitalize off of it, what you've done is set yourself up going forward for a lot of bad habits to overcome. The way to approach the markets is to, whether you're trading discretionary or mechanically, it is to develop an edge that you carry out in the markets and that you're able to execute. Like, and again, we put out a video last week. There weren't many views on it. It was probably the best video you could see in a while. And there was like 1,400 views on it because it was about execution and obsessing. If you want to be able to master the markets, to conquer the markets, I feel that that we do a good job doing that. Very few people are able to consistently do this. I look around me and I'm surrounded by an entire community that is able to go ahead and execute and do this. So I feel like that, even though those are big words, conquer the markets, and we all know that means first conquer thyself, and we're the first ones to say how incredibly difficult it is. But if your plan is to basically fade momentum and do that all the time, I mean, it's a very difficult thing to do. The most money could be made on the turns. But here's the thing, like, we called the turn down over here. That's when we called the bull market breakout and the turn. We weren't trying to fade it the whole way. When the momentum was down, we were with the momentum. As the momentum's up, you want to stay with the momentum. Anyway, let me catch up with a little bit of you and see what's going on over here in the comments. I mean, seems normal to me if people are FOMOing in and they see price up 5%, 6%, 7%, above 60,000, 63,000. Like, there are many people out there that are new to the markets. There are many people out there who have just begun trading and investing. There are many people out there who have just gotten into Bitcoin, and everyone is, is uh, like susceptible to being influenced by the emotions that comes with trading and investing. And I'm sure there were a lot of people who just FOMO'd in, putting on leveraged longs above this area, that's above 60,000 today. And yeah, I don't. I think that it's natural for them to get slammed. I don't think that has anything to do with market makers as much as like the natural rhythm of any market. That's what I think. Um, and kind of neat though. Did you see where we slammed down into? Do you remember this resistance area that we pointed out yesterday? And we said if we were able to break above it, then we have this area to target. Isn't that neat that we just came and slammed into that area? I'm going to go ahead and adjust to what the market's doing right now. And I'm going to move off of. I'm just trying to first see. Let me make this line a little bit bolder for you, for myself. All right. I just want to see where that came into play last. And that was off of this wick over here. So I don't really have it off the exact bottom. First, I'm going to start there and just move it off the bottom. And then I'm just going to go see where that is in real time. And then it went under though. But what I'm going to do is adjust it down now. And I'm going to adjust it to the low of today's wick, and that's upward sloping. And the reason being is because usually where the market's last touches into a structural line is what the market is paying attention to. So closing below this line at any point in time, that likely puts us on course with trading into this trend line resistance that we've taken a look at. It's probably not drawn the best. I would like to draw it the best. So let me just go ahead and draw that in. Right. And if at any point in time price were to close below here, then likely we're coming in for an important test. If that sell impulse triggered, why they don't have 100% win rate, the odds are that then we're coming into a bigger line of support to test. We don't need to look at that today, but I like to provide the next awareness points always for as it comes into play. We're already ahead of it. But I want to look at this chart that we looked at yesterday, which is quite messy when you look at it all together. Look at this, right? And I showed you yesterday how we got here. So if you didn't see that, take a look at it. I want to take a look at it just to get an idea of where we are right now. And yeah, I don't see that same awareness point. This is on Coinbase versus the all-time index. Coinbase is not really showing anything until we get to that new all-time high. Do you notice that as we get to the new all-time high, horizontal resistance? By the way, the bigger resistance is going to be right over here at 66,761. Why? Do you see the two touches over here? Do you remember the previous cycle ceiling? If you remember the previous cycle ceiling, when we looked at what happened in 2017 December high and why we were able to use 17,250 as the previous cycle ceiling, you understand why over here. But there's the top touch. So that whole area is horizontal and also trend line resistance. So we'll be watching that and looking at that going forward. But I just want to come back over to this chart and come on the daily and to zoom out a little bit. And we soon might have to be looking at placing. Yeah, I mean, I say soon. We have a long time yet. We first got to make new all-time highs. As we make the new all-time highs, then we'll be looking at, because what happens when you're in price discovery? There's no more horizontal resistance. No, but the trend line resistance will absolutely be in play. So that's what we want to look at as we go. And I just want to show you, let's move one over here now. And I want you to see the perfect touches. Do you see the structure of the market? It's just so beautiful to see. And I guess we're adding them now, but I'm going to erase them so you could see it. You could see all the touches again that are occurring over there, right? I'm going to bring it up. I'm trying to find, yeah, it's this one. And do you see what I'm looking at? I want you to learn to see what I'm looking at so you know yourself. Here's the resistance, resistance, resistance. Over here, you peaked below it. They're still important, and the structure runs throughout, but I'm trying to find the biggest and most touches. And then I see the wicks through over here. This is where the body started to form. I just want to look at one more with you, one or two more. That's a big one right there, right? Do you see why it's such a big one? You have this touch as support, and then resistance, resistance, resistance. That's a really big one, and right above it as well. And if I just go right above it, you could see again where we have then these touches over here and over here. So all of that as we come up will be very important for having some type of awareness of when we're running into any type of resistance. And then when resistance is broken and becomes support. Right now, that's getting a little bit of ahead of ourselves, but I just wanted to have a little bit of fun with you. I don't know how that line got over there or what happened. All right. Rob, Beautiful to see everyone in over here. I'm trying to bring back a little bit of that high energy CTM public sessions live. And that's because I'm about to enter into another very dense work phase in 2022, March 14th. It'll be the 2 year anniversary in just a couple of weeks of when CTM 2.0 was dropped on the community. And the next 6 months ensued just an enormous effort, a collective effort by the whole community in developing what we have here today. CTM 2.0 has been forward tested now for over 18 months. Not only that, CTM X now then was dropped onto the community and a new growth spurt had ensued. And then that's been now, a couple of months, and we're getting ready for the next biggest push of CTM. And we're doing it while we are in, let's say, favorable price action. By the way, I'm cautious about what comes up next. So let's go over this chart today as we begin to, before we close. I want to talk about this, right? If you want to learn, the best thing you can do is join the community, work with me and this team. And I, by far, that just like, it's an absolute treasure if you're able to distinguish it. And if you're able to distinguish that, then that's it. That's all you need to do. Or you could go back and you could just watch these videos, the past videos, every single video on here, and you will develop a wealth of education. But we keep moving forward. And one of the things that occurs for those people that are serious, and if you're into the markets, you better be serious about it. If you're not serious about it, you're not gonna win. Period. But each and every day, I continue to learn and grow. I continue to share that knowledge with all those around me. And each and every day, they continue to learn and grow, and their knowledge continues to grow. And within the community, that is what iron sharpens iron. And the collective ability and knowledge base of everyone involved continues to grow. It gets a little scary because it becomes like an exponential growth. And it's difficult to keep up with, but that's why we have those growth phases and then consolidate, just like markets do. And it's really important. We're getting ready, or I'm getting ready to embark upon, after it'll be exactly 2 years, March 14th. So there it is, March 14th, exactly 2 years later. I'm ready to bring CTM to the next phase. So that's what we're gonna do. Let's take a look at this deja vu. Very similar setup to last summer's perfect signal. So one of the things is, I'm telling you, listen, don't try to time market tops and bottoms. By the way, have you noticed, or I noticed, that oil has been bid? Oil trading now at $78 a barrel. A strong oil, rising yields, and a rising dollar would not be the best for markets. Thus far, the markets have been able to shake off the 2024 breakout of the DXY. At that same time, or why that's happening, hold on one second. At that same time, or why that's happening, we've seen that breakout of yields and oil also at the same time. And the market, you're seeing NASDAQ here bringing new all-time highs, right? And it's been shaking it off. And I'm not in the habit of trying to call all-time highs, but being as someone, remember over here, like, well, first of all, let's start here on the NASDAQ. And, this was a close your eyes moment. Everyone out there is doom or bearish. And we're like, that's a trend line break from the bear market, literally saying, close your eyes. Right. I remember this Friday over here, as we came into that top resistance, we looked at it from this way, by the way, that Friday morning. That was on a live stream. And as we broke above, that was just an awareness point we called out. After we had this purple line developed, I posted on Twitter an inverted chart of this because everyone was so bearish. And I posted the invert chart and I said, if that sell impulse triggers, this could waterfall down. And everyone thought it was very bearish. And then I did it without showing this was the NASDAQ. And then once I showed it was the NASDAQ, I think that helped a lot of people overcome their bias and waterfall, sure enough. And in this area, I became and started watching out for a correction. There was a correction, but that stopped over here, or I changed my own bias over here this very day. I guess November 1st or October, right around here. You all remember you were here with me as we did it. And we talked about how we could be testing the top of the channel and or new all-time highs by the end of the year. That happened a lot quicker than expected also. That just happened a couple of weeks later. But was able to change my bias and we've stayed that way. And right now I'm saying, well, you know what? Not that I'm trying to cut. I feel like if you're on the right side, then then you're just not always the person who's like, as Bitcoin comes off from 17,000 to 60,000, short and every move. Like that's not how you that's not how you trade markets. I don't know how that works or what happens with those people, but that's not how you trade markets. And right now, though, I think there's some caution out there. I want to take a look at this with you because there's someone else who's cautious and saying deja vu. Are we looking at what happened over here in this particular area that was into last summer? So here's a good chart over here. And look, just the simple sell impulse line. Sell impulse line. This is the NASDAQ. You can see the loss of momentum towards the top. Granted, and mind you, again, when you have a mechanical strategy that tells you when to be in the market and when out, it doesn't matter. Holding massive positions here. Tesla on the daily out of the short, NVIDIA, FNGU, both massively long. I don't know what, when it exits, we'll exit the position. We'll say that's when momentum's rolling over. But we want to be as sharp as possible and we want to have our timing as best as possible, which is why we look at this. And the question is, we're seeing again RSI divergence occurring. Are we running out of steam? Again, for me, it's also the seasonals. Watch out for that. And yeah, I'm throwing a bit of caution up from where we are right now. And you can see the sentiment looks like RSI. Here's the thing. I'll point two different markets, two different areas for you. The first one, the dot-com bubble. And a lot of people thought that everything had gone too far, too quick, and it kept going. And by the time a lot of people chased, that's when the pain soon came. Bitcoin, 2020, the move off of 10,000 to 14,000 came so quick, 40% move, that people thought from traditional markets, you know what, it come too far too quick. We said risk is to the upside. Shortly thereafter came in 19,000. That's 100% move that happened in like 2 months. A lot of people thought it came too far too quick. A lot of people started de-risking down, taking profits. We were looking for a correction off that $19,000 move and something like a 30% correction. And there was like a quick move down. I don't know if it was like 15%, but then it was quickly bought up and faded. And again, right away we adjusted. We said, you know what? Risk is to the upside. Price went from 20,000 to 60,000 over the next few months. You don't know, like there are very few occasions when overbought could remain overbought or oversold can remain oversold. Right now on Bitcoin, I imagine that the RSI is extremely overbought. But if you go back into what we were looking at just a few weeks ago, when it was overbought, we said, well, that usually signals that we're going to have an upward price movement. Now, has it gone too far? I don't know, maybe. I'm glad I don't have to guess. And that's really the position to be on. I think the more you learn about markets, the more important it is to realize that just like going off the cuff is no way to go about it. The markets here, the equity markets, I have a lot of cause for concern as I'm bringing to your attention right now. Again, this is someone who's been on the right side of all of this, and never. Anyway, we'll see what happens. I'm glad for all of you who are here for these live sessions to bring the energy. I feel like the energy is important right now as we're ready to get back to work. And those are it takes a lot. You don't you don't get to develop this type of edge in the markets without a tremendous amount of work. This might look easy to you, but there's nothing easy about it. It takes a tremendous amount of effort. And you see these periods where price is running sideways. I like to talk about this, or I like to remind people. People think that this is up and to the right. If you look at, let me just refresh this page so you could see. If you look at this chart over here, you're going to think that this is just up and to the right. Like the P&L just goes up and to the right. And when I look at this chart, I'm like, no, what you're seeing here is not up and to the right, because that looks like up and to the right. What you're seeing most of the time is months of price running sideways. Months. This is months of price running side. I'm sorry, I would say price and account balance. The account balance is running sideways in drawdown. This is the all-time high intra trade, and this is the low. So most of the time, you're going through many months of not new all-time highs, but running sideways. You think it's a different perspective and it's a different picture when you look at it from that aspect. And most people don't have what it takes to be able to do it. They don't they don't have what it takes to be able to do it. They want it and they want it now. But that's what it takes. So what we're doing here, and by the way, by having multiple assets, like just point over here, you can see on the top, both Bitcoin and Ethereum are running sideways. Look at the massive move up on Solana during that period. And generally, look at Cardano making the big move up here. Bitcoin up top is just going sideways. Usually, they're taking turns as that liquidity runs through different pairs. But what we're about to do is to add or develop. I'm going to drop the strategy, and then the hive mind is going to do what it does. That collective, massive brain power is going to go ahead, and we're going to find what during these periods of running sideways, a complementary strategy here that is going to keep us closer to the all-time highs, and or even why in drawdown running into all-time highs. So the energy here, the energy here on the public end is going to drive that. So I'm ready for it. I hope you're ready for it. Have a beautiful day, everyone. Ace, I mean, look, I know you understand it, and I also know that since I can remember, you have been present every single day, putting the work in, and that is why you understand it. It all comes from yourself, right? And that's the importance. Have a beautiful day, everyone. God bless you. Enjoy your day. Yeah, David, thank you. Yeah, if you enjoyed being here, if you enjoy this type of look at the markets, which is different, if you enjoy being on the right side, if you enjoy CTM, smash that like button, hit that like button, share some love. Everyone, have a beautiful day.